The following is a presentation of TFNN. The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 10th marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. Hope everybody out there had a fantastic weekend. Welcome back. It is Monday morning. Let's go look at one of our tools. This is the tool I call the price of greatness is responsibility. You know, it was Winston Churchill who said that the price of greatness is responsibility, and these words are proven time and time again. You know, both the climb to greatness and the time one spends there, well, it requires taking on large responsibilities and handling these responsibilities with diligence, with care, and, of course, with skill. You know, if part of your life's mission is to accomplish great things, then a must is taking responsibility for the smaller things that face each of us day to day. As an example, what words would you pass on to your children, to a student? For me, I'd tell them if you fail to do your homework or take on extra credit or research even further the study of your profession, you will not develop fully your ability or knowledge of the subject matter. Yes, take care of the small things, for if you fail to act caringly, if you fail to be responsible, you will likely fail in crucial relationships, whether they be personal or professional. You know, oftentimes, businesses fail because of a lack of record keeping, the small things that add up to a big thing. Look, when it comes to your trading and investing, the real power is in the details. I say, know your system expectancy. And if this is a new term to you, then learn about it. For example, as a subscriber of mine, I offer you a free 90-minute workshop, a course that teaches you about the money management game and how to develop your system expectancy. Heck, you can try that. You can get that. It comes, you know, since my workshop, my newsletter's a 30-day unconditional money-back guarantee. You're putting down a deposit that you can get back in 30 days out there. You know, my clients and I, we've been trading. You want to know your system expectancy? My clients and I, we've been trading the Rhodes Momentum Indicator system since August 8th of last year. It's when I fully implemented it and we began trading. We've had 61 trades. They've generated a 21% return versus the S&P's 11% return in the same time frame. Our system expectancy, it's a positive 0.35. Know your system expectancy. Look, responsibility walks hand in hand with both capacity and power. If you want more capacity, if you want more power, just take on more responsibility, because taking responsibility nurtures self-confidence. And self-confidence, well, that helps us to be a more interesting person and to be more attractive. You see, the more you believe in yourself, the more power you possess to attract good. If we are to enjoy freedom, folks, we must act responsibility. So let's have a responsible week, a responsible life. Our call number is 877-927-6648. Let's go check out the futures market here. Right now, Dow futures trading down about 25 points. Not a big deal. They're trading down at 16,422. Certainly off of their session lows out here. The S&P futures down about 3 points, trading at 1875. NASDAQ futures are flat, trading out at 3703 and a bit of change out here. King dollar up a couple of pennies right now, trading at 79.75. Kind of quiet in the currency market with the exception of the Great British Pound. We'll take a look at that currency pair and several others in the hard metals market. We've got gold is flat. It's trading at 1337. Silver flat as well, down 4 cents, not a big deal. Trading out at $20.88. Light sweet crude, on the other hand, it's off $1.20, down a little over 1%. It's trading out at 101.38. Not a flat market overseas last night. In Asia, we had the Nikkei trade down a full percentage point. That was off 154 points. The Hang Seng off almost 2 percentage points, 1.75. It was off 395 points, and the Shanghai off 61 points, nearly 3%. Over in Europe right now, the DAX is off 25 points. The FTSE down 4. Again, our call number 877-927-6648. Where do we begin our day? Well, let's take a look at the currency pair, the euro-Japanese yen. You know, if you were with us on Friday, we know that the euro-Japanese yen, this is our currency of choice. This is our soup du jour out here because it's the soup du jour that tells us whether the market's moving higher or lower. Right now, not giving us really any information. We're trading just about where we closed on Friday's session. Of course, on Friday, it was forming and completing a 0.786 Gartley sell pattern out here. We still have not received the bearish reversal signal here. If this level is taken out, if we just simply trade sideways for a few days, whatever the time period might be, and then this area fails, meaning that close above the 143.76, nay, not by a couple of pips, by something a little bit more than that, not only would we see a move up to the highs here, which in this case is December 27th, now remember, the euro-Japanese yen, usually a little bit of a leading indicator. In this case here, it made its highs on December 27th, whereas our markets were making their highs, in essence, on December 31st. Of course, there's newer highs since then, but not newer highs in the euro-Japanese yen. However, if you take out a 0.786 Gartley, now what you really want to see here is some type of bearish reversal signal, because just getting up to that level, that doesn't mean, in this case here, if this pattern fails, it turns into a butterfly. But if you get a confirmation and it fails, well, then it does turn into a butterfly, and that means not only moving back to its swing point high, the December 27th level, which is 145.67-ish, it'll actually go ahead and move up to an expansion level, maybe 1.272, maybe 1.618. So, with regard to this currency pair, you've got a bearish pattern that's in place, but we do not have the reversal signal here as of yet. So it's really a 50-50 coin toss when we take a look at that currency pair. If we go take a look at the hard metals out here, we'll take a look at the Great British Pound here in a few minutes. If we take a look at, start off with Goldilocks, as I mentioned, really trading flat out here. Of course, it's that 200-day exponential moving average that continues to act as a support level. That number, 1329.80. We have not seen a close below that since it broke above that level, which was on February 24th out here. It is trading near the 0.618 retracement level, so we can see that it continues to just simply travel sideways. This is a more bullish than bearish pattern at the moment. It's been trading sideways since it got above the 200-day exponential moving average, and also at that stage moved into, on a daily chart, moved into an overbought condition. When a market moves into an overbought condition and just simply travels sideways and consolidates in order to work off that condition, it is bullish. It is consolidating up at its highs right now. Bearish in this case here, really not bearish, just simply a normal retracement ought to at least bring Goldilocks. We would go from the swing point low on December 31st all the way to the high so far, intra-session high from March the 3rd. Just the 0.382 retracement would take it down to about 1288. So if we see it close below the 200-day exponential moving average, that doesn't mean it's bearish. It does mean it's a hurdle that it needs to overcome, and you should expect a move down to about the 1288-ish level out there, and that is on Goldilocks. If we take a look at high-ho silver out here, silver is finding support right now at the 50-day exponential moving average, so it has not been able to really close above that 200-day period. The 50-day exponential moving average right now, that number is $20.67. The low out here has been $20.61. That took place earlier this morning. The key level for us to watch is really going to be this old consolidation box out here. I wish I could just stretch it. I know I can. Let me try doing it now. There we go. There's the stretch out there. And that's right at about the level, somewhere right around the $20.50 type mark. My preference would have been for it to have hit that earlier today, well, really any time today, and then bounce back above that 50-day. Now, the 0.618 retracement level, $20.19. You're trading just slightly below the 0.382 level. Our expectation should be that we ought to see price try to push down into that area between $20.19 and $20.50. If we go take a look at light sweet crude, that's trading off $1 and about $1.25 right now. Now, in the case of light sweet crude, it has been in this nice rising price channel. This happens to be the April contract that we're taking a look at. And if you go all the way back to the time period of January 13th, what you'll see is a nice rising price channel. That's if you're watching us on TigerTV. If you're listening on your radio or your mobile device at TFNN.mobi, we appreciate that very much. Remember, you can always catch the archive of this show on Channel 9. But If you'd like, you can catch the live stream. You can see this chart right now. Just go to the homepage of TFNN.com. Upper right-hand side, you'll see a button, three smartphones on, three smart intelligent type devices, let's just call them, over in the upper right-hand side. Click on that button. This show will start streaming live to you. And, of course, if you'd like to see these charts in HD, then just join our TFNN Tigers Den out there. You can test drive that for 30 days as well. We can see here with regard to light sweet crude, this morning it's broken through the rising price channel out here. This one, I think light sweet crude becomes a little bit difficult to trade. Now, it's possible that it's forming an A to B equals CD down. If it's going to do that, in order for that to occur, it's going to need to trade below $100.13, and on a 120-minute time frame, it needs to really do that with more than 47,000 contracts. As it's moved into that level here right now, it's moving in with with light volume, so it does not appear to me. If it looks like support would be this little bullish engulfing candle right around $100.13 out here. It's trading right now at 101.36. That is on the 120-minute time frame out here. If we take a quick peek at natural gas, see what that is doing. Just a sideways move. So this is a daily chart that we're looking at on my screen. This, too, is the April contract. So just a sideways move out here, neither overbought nor oversold, so not giving us any real good indication as to where it is going. I did mention that in the currency market out here, we noticed the Great British Pound having the most movement. Actually, let's switch over and take a look at a shorter-term chart for the Great British Pound. Let's look at a 30-minute chart. See what pattern it is showing out here, because the Great British Pound on a weekly chart we know is broken out above a significant resistance level. We're going to find out whether or not that's going to hold us support. So if we take a look at the Great British Pound, we can see here just really traveling sideways and consolidating. The top of that, the bottom of the consolidation box, you'd have to give it somewhere right around the lows here at about 10:30 in the morning on February 24th, right around the $1.65, 1.658 level. Let's go back and take a look here at the longer-term time frame. Give me a moment here. Let's put out the Great British Pound. Here's the weekly chart. So the ideal buy, we'll have to look for a pattern right around the level of maybe about 1.647 or so. Take a look at that nice wide-ranging bar on the weekly basis. That's the week of February 14th as it broke through that dark black line on my screen out there. That's resistance. That now should become support. Right around 164.7, we'll call it. 877-927-6648. Dow futures off 35, S&P down 4. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. On that Great British Pound chart that we were taking a look at, we were looking at the weekly chart earlier. Now, on the daily chart out here, you can see a nice rising price channel that has evolved here over time. If you go back to the July 19th, 2013 time frame, you can use either the July 9th or the July 10th candle session. You can use the open of July 10th if you'd like. In fact, let's go ahead and use July 10th out there. So July 10th, and your next touch points to form the channel line really being the open on February the 6th out there at about $1.63. That happens to touch the open of February 7th as well at $1.63 out there. So that's a nice little anchored rising price channel. Therefore, it says, maybe the, what did I give you, what, 165.7 or so? Maybe we don't see price actually get all the way down to that area. The 0.68 retracement of this entire move would take you to about 164, what is that, 164.69 out here. But look for price to be able to push down and hold the support level right around the bottom of that rising price. Now, it can punch through it just a bit, so it could get down to the 0.618 level. But that would be the area where you'd start to take a look at a long trade, or you'd start to take a look at potential failure here. And that's what you want to be paying attention. Look, we never know what's going to happen inside any trade out here. But if we do take a look at the weekly time frame, because we know that for a period of months, the Great British Pound U.S. dollar has been trying to break through this consolidation. We know when you break through a consolidation, you're typically going to do a measured move equal to or greater than the consolidation. So the ideal setup here says that the Great British Pound is going to get stronger against the U.S. dollar, and that is unless it breaks back into the consolidation. That would then be very bearish for the Great British Pound, because if you can't, once you break out, if you break back in, well, you can run all the way back down to the bottom. You don't have to, but you can run all the way back down to the bottom, right around $1.48. So obviously we continue to watch this, but more bullish than bearish when we take a look at the Great British Pound U.S. dollar in its current chart patterns that we have out there. Speaking of bullish, or bearish out here this morning. Moving to the upside, we've got E-House China Holdings. EJ is a ticker symbol. They closed at 1523. They are trading out right now at 1680, so that's a nice, healthy move. You've got Mattersight Corp, MATR. Apparently it matters. It closed at 605. They're trading at 750. I don't see any news behind its move out here. You've got Revolution Lighting to the upside. It closed at 336. It's up at $4.15, so it looks like that is a acquisition that is going on out there. You got Facebook trading the upside, closing at $69.80 on Friday. It's trading up by just slightly, $70.70. Plug Power Inc. Talk about a stock chart that is off to the moon out here. This thing was trading at 50 cents not too long ago out here. I believe what really brought this onto the radar screen out here, let's go ahead and take a look at the stock chart, is Tesla. PLUG is the ticker symbol. So this thing is looks like it's going to gap up again this morning. It's trading at $9.04 in the pre-market out here. Closed out the session at $8.27. The high inter-session high on Friday was $8.35 out here. This thing is just simply gone parabolic to a certain extent over the, this thing was trading on December 3rd. At 80 cents, closed at 79 cents out here. Nice gap up the very following session with some accelerated volume. Never came back to test that. Another nice big sign of strength out here on January 2nd. That is of this year. January 2nd, it was trading at about $1.80 to $2 now. It looks like it's going to open around the $9.20 level. No possible way to really do any kind of, I don't know what was going on back here with regard to this company, if this was, a shell that was purchased back here in the 2012 timeframe, or how long these guys have been around. It shows on the stock chart, shows it trading up around the $45 level back in December of 2007. I just don't know enough about the company or this stock chart out here, but really, if we take a look at a longer-term time frame, if I had to put up a monthly chart on this thing, well, you certainly have your sign of strength off of the bottom, don't you? You saw that during the month of December. You saw that during January, and it is continuing on. So right now, the left side of this chart here is, to me, is basically irrelevant because there was just simply no volume out there. It shows even price back here in May of 2006 out at about the $63 level out there. So if you're inside this stock chart, I just simply say continue to ride it and just move your stop up and let the market go ahead and take you out. If that is on Plug Power Inc., PLUG. Now to the downside here this morning, we've got 3D Systems leading the charge. They closed at 67.31. Their last trade fired off at 64.46. DDD is the ticker symbol. We'll go see how that's going to trade, what kind of volume, where that's trading. No, I see a high volume low at about $54 and change. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 45 points, trading out at 16,407. S&P down 4, trading at 1874. Composite off 5 points at 43.31. Russell 2000 down 2 points, trading out at 12.01. Apple is trading up about 30 cents. Microsoft up 2 pennies. Google off $3. Leading the charge to the upside, FMC Corp. FMC, I believe they are splitting into two different companies out here. Alexion Pharmaceuticals, we'll leave FMC behind. Alexion Pharmaceuticals up about 3%, up $4.80 right now. You've got Montage Technologies, MONT. That is up a nice 18% this morning. Let's go see what that is trading into. Let me see here. They receive a non-binding. Okay, so they've got a proposal for a buyout. Looks like out here, that's what's pushing that stock up, so no need to look there. United Rentals, URI, that is trading up. They're going to acquire National Pump, it looks like, so they are trading up a bit this morning, about 3%, up $3 and change. Kihu 360 Technologies, QIHU up 2%. We've got Chiquita Brands. I haven't seen that in quite a while. So the banana is to the upside. What are they doing out here? They are trading up 17%. Must be something going on here. Let's see. Okay, they're going to merge with a company called, spelled FYFFES. You go ahead and pronounce it out there. But that's trading up a nice 16%. To the downside, Tesla Motors, Tesla off $5 right now. Criteo, CRTO, may have butchered the pronunciation of that name, but it is trading down 6% off $3. Baidu off a couple of bucks right now. Bitauto Holdings, BITA, that's off 5%. Boeing down. You would expect Boeing to be down after the Malaysian jetliner of the 777 disappearing. That is that's quite a story out there. BA is the ticker symbol. They're down about $2 and change as we speak right now. Solar City off $1.76. YY is down about $2. BHP Billiton off $1.80. Again, our call number 877-927-6648. I mentioned at the open here in the pre-market we had 3D Systems trading down. 3D Systems has a high volume swing point low right now. Gap down that took place on February 5th has volume there of 42 million shares, the top of which is 65.73. You're trading just slightly above that right now. So that level is being tested. Looks like maybe for the second day in a row. 65.73. What do we do on Friday? 65.63. Closed above it on 6 million shares. So coming in with light volume, maybe a test out here inside of 3D Systems of that low on February 5th, right around $54.63. You'd really like to see how that low gets tested, whether it holds, whether it's on light volume, because if that gets taken out, that becomes a very large A to B equals CD to the downside. So I would be patient on 3D Systems out here. We did see some institutional selling or something to that matter take place on February 5th out there with big volume to the downside. That was on 3D Systems. As long as we're taking a look at that, let's go look at Stratasys. I mentioned that they were trading to the downside. SSYS, that's trading off 3% this morning, down 350. So it, too, is headed. So maybe Stratasys is the one that gives you the first piece of information on that candle session from February 5th out here. Right now it's trading into it, and that is it's a high volume-ish type low out here. Of course, it's really got a high volume low back here that was tested with light volume, and that took off to the upside. So that's why you want to be patient and see those high volume lows get tested. That one that we're looking at on Stratasys, by the way, that took place on September 13th. Gaps down, big volume, meaning 7 million shares, and then that low gets tested with 1 million shares. That's what you like to see. And then you wait for some type of reversal signal. Well, you got that. You got a big bull separating line candle. That took place on October the 10th out there, and that was on Stratasys. So now what you want to watch for is you want to watch Stratasys and see what happens with this high volume low from February 5th. The price point there is 102.21. Only 3.8 million shares there. So it was moving back and closed inside there. About 1.5 million shares on Friday. The real test, the real information is going to come at the price point of around the below 102.21, and whether or not it closes back above that. If you were to see volume start to accelerate to the downside in Stratasys, that would be forming an A to B equals CD to the downside. That would actually take you. Now you're gonna want to see it move down with volume out here. Well, it depends if you're bullish or bearish, but the bearish side is that it takes out that level with volume. And even though the 1-to-1 is 95.09, Stevie San says nah. It won't head there. It'll head back to about $85.24, around the 1-to-1.272, and take you all the way back to that last real sign of strength out here in a swing point from August in 2013. That is on Stratasys out here. Let's take a look at moving to the upside. Oh, I don't know why I put it in the core stocks out there. I don't even know why I put 3D Systems. Let's go take a look at Alexion Pharmaceuticals. That is the leader to the upside out here right now as we speak this morning. ALXN is the ticker symbol. That's trading at $5 and change. Of course, you have to type in the correct symbol in order to pull up the chart. That is one of the first basic rules of technical analysis. As you can see, I blew that on that first go-around. Alexion Pharmaceuticals. Now we've got the right chart up on my screen out here. Why don't we have volume? Let's put the volume inside of this. This thing had really nice breakout session back here on January 30th. Talk about wide price spread and accelerated volume. Well, this has it. This was on January 30th. 5 million shares to the upside. Really wide price spread out here. It has come back and tested that breakout session. It's pulled back into the top of that level, 2 million shares. This was on Thursday. On Friday, you're in there with about 2 million shares as well. Now let's take a look at retracements even just simply from the breakout level. And I would use the January 27 time frame. So this thing has made a 0.382 retracement in essence of that breakout session. This could actually be forming an A to B equals CD to the upside here. We'll have an idea when we see what happens with regard to volume as it approaches the swing point high, which happens to be from February 25th out there. That level is 185.43, only a million shares up there. Already today, this is up with 396,000 shares. So this, in fact, Alexian on the daily chart out here with only being a 0.382 retracement, that's pretty strong out here. If it does get past that swing point, that'll be a large A to B equals CD to the upside. You say how large? I say very large, muy grande large, like take it about to 222 to 238 type range out there. But first it needs to clear its swing point at the 185 area. Let's look at a weekly chart out here, see what's going on a weekly chart out here. Boy, nothing wrong with this stock chart. We take a look at the swing point on a weekly, October 5th high, 119.54, 4.6 million shares out there. It gets blown away with 7.6 million shares on October the 25th, and it's been to the upside ever since. Boy, a weekly A to B equals CD on this thing. Let's go take a look at that. I don't know where to begin here. Probably come all the way back to about this level here in November of 2008 is your A point, your B point right up here. And, boy, take a look at that. So this thing says 187.29 would be your 1-to-1 A to B equals CD. But you need to take out that swing point on the daily basis. I say, nah, this is going to move much higher. On the weekly chart, you're looking at 215, 216 as being its next stop out there. Have a request to go take a look at the VIX index by one of our Denners, longtime Denners out there. So let's go take a look at the VIX index. This is the volatility index. Stevie uses it as a guide for liquidity in the marketplace when it's trading below the 50-day exponential moving average. Tells you the market has got a lot of liquidity and expect the market to move higher sideways at the worst case. When you get above the 50-day exponential moving average, which, by the way, that price level is 1470. It gapped up this morning. You are trading out at 1477. This says when you get above the 50-day exponential moving average, that is where the carnage takes place inside of a stock market. So one key level to be paying attention to today is most certainly the VIX index, and that level is 1470. You close above that. That is not good news for any bulls out there, and that becomes good news for the bears. So that's what you want to be paying attention to when it comes to the VIX index, VIX. Let's go take a look at the, let me see what's going on here as far as net advancing or, net declining issues, minus 802 as we speak here right now. That is definitely not a good thing for the bulls. Of course, we're still young into the day out here, but you see more than, what's the number, Steve-O? I can't remember off the top of my head. Too many numbers. It's only like 200 and some odd issues out here. But I'll give you the number. 273 is the number. You see 273 or more net declining issues today, and that tells you that the bears will have taken control of the wider swath of the market of the New York Stock Exchange out there. And that says if you are long, please make sure you have some kind of stop in place. Make sure you stay inside your trading strategy. You know, if you're a longer-term trader, look to your weekly charts, look to your monthly charts out there. But right now, you've got accelerating, declining issues out here, and that is more bearish. So the combination of that with the VIX being above 1470, if that's how it ends up the day out here, the change in trend, you can say, has taken place inside of the markets. If we take a look at the, let me see, what have we not looked at per se? I usually try to save the indexes and the ETF structures for the second hour of trading. Usually we take a look at the futures markets here, so let's go do that. Let's take a look at the daily futures out here. Where do I have them? Should be just jumping right off of there we go. Index, it's right there in big capital letters, says index futures. So if we take a look here at, what do we want to look at? You know, not a ton of damage here, not at least just yet. If we take a look at the ES Mini here on Friday or for the week, no, this is the daily chart. Last Friday, forming a little doji candle. You see it close below the 1876 mark. Right now you're trading at 1874 and a bit of change out here. But if you see it close below that, the leaves will be falling from the trees. You should expect to see price move back to about the 1847-ish range out there. So that'd be a nice move, 1847 versus right now trading out at 1875 or so out there. So what is that, about a 30-point move? And there would actually be nothing wrong. That would just be coming back and testing a consolidation area inside of the ES Mini on a daily chart out there. might cause a lot of pain if you are long, but that's what you would want. That's what you should expect if we do see a pullback through the end of the trading session. Again, way early, only 15 minutes into the trading session as we speak here right now. Let's take a look at the NASDAQ futures. Let's go see what type of picture they are painting for us on Friday. You know, Thursday was the key session here inside of the NASDAQ futures. It formed a key reversal session that says the high of 37.25 from Thursday, from March the 6th, really is your resistance level. That resistance level was tested on Friday. As it was tested on Friday, looks like it formed one of Basil Chapman's peak Ds out here on the daily chart. Its fourth peak out there. We saw a little bit of follow-through on Friday's session. You do have a little hammer. I don't know if we're going to really call that a hammer candle. I just don't know that there was enough of and I'm referring to the session from March 3rd, which was, last Monday out here. You know, there was a push lower, but see the body of the candle, really the essence of price, really more of a consolidation. So even though it looks like a hammer, smells like a hammer, Stevie's going to say not a hammer candle from the standpoint if you close below it. If you're long, you're wrong. There may be other reasons, but not so much because of it being a hammer candle out there. You really need to have a decline and need to have a market that is in in some form of decided downtrend, and one session just doesn't make that, which was March the 3rd out there. If we take a look at the Dow futures, let me see what the Dow futures are doing out here. Really just kind of, trading slightly lower, so not a huge deal out here. I'd say the Dow futures really send off a signal because of that wide-ranging bar on March the 4th, and that low is 11. That's not the Dow futures. That's the Russell 2000. My apologies for that. So let's focus on the Russell 2000. Now, what the Russell 2000 futures did out here was we had that wide-ranging bar from March the 4th. So right now, just trading inside that bar is actually more bullish than it is bearish, for sure. What we did have is we know that it moved through. We know the IWM moved through with massive volume on the same trading session, March the 4th. Now, wide-ranging bar, and then what's unusual, you do not typically see this type of wide-ranging bar and then all of a sudden two doji candles form. Doji candles, they have a lot of meaning at a resistance level. Now, because we're at all-time highs, it's hard to call this a resistance level, but we're going to simply call the resistance right now being the high of March the 4th. And then the doji candles out here, we did see a slight move lower on Friday. And what we also had was a key reversal session out here. So we really have, if you take a look at it, you can see the true fight between the bulls and the bears out here. So the bears are really trying to defend the highs. If I take the Russell 2000, you take a look at this wide-ranging bar, and you go look for other wide-ranging bars. So let's just do that together. Here's a nice wide-ranging bar. Here's a wide-ranging bar, if you will, from November the 8th. Two doji candles, and then it moved higher on November 13th. That led to higher price. Two doji candles and a move lower. I wonder what that means. 877-927-6648. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Really kind of a flattish market out here. The Dow's off 36 points, but, you know, that's not that big of a deal. The S&P is off a buck right now. The composite is up a buck, and the Russell 2000 down $1.50. Let's go check in on some of our core stocks. Of course, we're not going to see much in the way of movement here, most likely. If we start off with ExxonMobil. Now, ExxonMobil here had a gap down with some big volume on the trading session of March the 5th, the top of which should become resistance. That's 95.29. So far, the intra-session high has been 95.25, so it has not tested that. But a couple tests of that area out there, and looks like ExxonMobil may be trying to set up an A to B equals CD to the downside. That would take price to about 85.29, right down to the bottom of the old consolidation box out here. That's what's going on as we see it right now inside of ExxonMobil. If we take a look at IBM, haven't looked at IBM here for a bit. IBM now having closed its gap out here, so that is no longer a resistance area. That was the gap that was created on January 21st. This thing moved down with 13 million shares. Now it moved up into that area with only 4 million shares. But once you close inside, the way I take a look at it, once you close inside of that level, meaning the low of 186.79, which was the low of the January 21st candle session out there, the gap itself is now closed. So resistance here, this did form a little bit of a dark cloud cover in the gap down. So resistance inside of IBM still is is this 0.786 Gartley sell pattern. So it still has some strong resistance up at about the 190.35 area out here. But still, at this stage on the march up, nothing bearish, but it's got to expect resistance. Even the last time that was up here, that swing point being January 17th, that had 7.6 million shares. Friday, we were up with 4 million shares a day before 3.8. So it is most certainly running out of energy. It's not the way that you typically take over a resistance level, and that is in IBM. If we take a look at Visa, we want to look at Visa because it's the number one holding inside of the Dow. Visa right now today just really traveling sideways. It has resistance. The resistance level for Visa is where this had gapped down on January 24th. So it's got a little open window. Here is a resistance level because if you take a look at the low of January 23rd, and that is at 227.66. Again, benchmarking volume is 4 million shares. Last time it tried to get into that resistance level with 3.3 million shares, closed back below it. It tried it once again the following session with 2 million shares, couldn't handle it. It tried again on February 25th with 2.8 million shares, couldn't handle it. You can see it tested it the following 3 trading sessions as well out here. So you can see that is a strong resistance level in the case of Visa. Now, you close above that, and I'll say that resistance level then becomes support, and that would be 227.66. And if you wanted to watch the volume as Visa were to get into the 230.82 level, because that is the low of the swing point from January 21st, and if it can get in there with more than 5 million shares, it's telling you it wants to go not just tackle the high, which is 235.50, it would be telling you that it wants to take out the high. But right now, what we know about Visa is it is up against some significant resistance. That hit has not been able to bust through out there. Let's finish off the show by taking a look at Apple. If we take a look at Apple, really just traveling sideways out here. Now, what we know about Apple, it's got a nice big bullish island reversal bottom out here. That means if you see Apple's low get taken out from the trading session of January 31st, that would be at 493.55. That would be very bearish out here. But at this stage, just traveling sideways, and actually it looks like it wants to move potentially higher out here. At least go test the resistance level, the swing point from February 18th. Folks, it is Marvelous Monday. Thanks so much for joining us. Have a great day. Look forward to seeing you tomorrow morning, or hopefully in about 9-10 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.